Welcome to Financial Forensics, the podcast where we investigate the stories behind the markets. We don't just report the headlines. We examine the forces driving them and what they could mean for investors, businesses, and the global economy. Visit my website www.ascentinvestigate.com. Let's dive into this week's biggest financial developments. Wall Street's winning streak. The latest earnings season has started on a strong note. Major U.S. banks have reported better-than-expected results, fueled by a rebound in investment banking, strong trading revenues, and increased corporate activity. At first glance, the picture looks extremely positive. Financial institutions appear to be thriving despite persistent economic uncertainty. But the real story lies beneath the surface. A significant share of this momentum is tied directly to one theme: artificial intelligence. Companies are investing billions in AI infrastructure, data centers, cloud computing, and advanced semiconductor technologies. Those investments generate financing deals, mergers and acquisitions, bond issuances, and advisory fees, all of which benefit the banking sector. In many ways, today's banks have become indirect beneficiaries of the global AI investment boom. A hidden concentration risk. This raises an important question. If a large portion of financial sector growth depends on AI spending, what happens if that investment cycle slows? Lower corporate investment could quickly reduce capital market activity, deal-making, and trading volumes. In other words, the financial sector is becoming increasingly connected to the technology cycle, making banks more exposed to a single dominant investment narrative than many investors realize. Inflation finally shows progress. Another key development came from inflation data. Recent U.S. figures suggest that price pressures are easing, reinforcing expectations that the Federal Reserve may be approaching the end of its tightening cycle. Markets welcome the news because lower inflation could eventually translate into a more supportive interest rate environment. One report doesn't change monetary policy overnight, but it strengthens the belief that inflation is gradually moving in the right direction. Regulators are watching closely. While investors continue to celebrate AI, regulators are becoming more cautious. The Bank of England recently warned that artificial intelligence could introduce new financial stability risks. Their concerns aren't about the technology itself, but about its unintended consequences. If financial institutions increasingly rely on similar AI models, they may respond to market stress in nearly identical ways, amplifying volatility during periods of uncertainty. Regulators also point to rising cyber risks and the growing concentration of investment in a relatively small number of companies driving AI development. It's a reminder that every technological revolution creates both opportunities and new vulnerabilities. Lessons from corporate America. This week also highlighted how quickly technology leadership can shift. Some established companies have struggled to keep pace with the speed of AI adoption, reminding investors that simply being a technology company is no longer enough. Today's market rewards businesses that successfully integrate AI into their products, operations, and long-term strategy. Those that fail to adapt risk falling behind much faster than in previous technology cycles. The bigger picture. When we connect all these developments, a fascinating picture emerges. Corporate earnings remain strong. Inflation appears to be cooling. Markets continue to reach new highs. Yet much of this optimism rests on a single dominant theme: artificial intelligence. Whenever markets become highly concentrated around one narrative, they also become more vulnerable to unexpected changes. That's why understanding where today's profits come from is just as important as measuring how large they are. Final thoughts. The biggest story this week isn't simply that banks are making more money. It's that the AI revolution is reshaping the entire financial ecosystem, from corporate investment and capital markets to regulation and risk management. The opportunities are enormous, but so are the stakes. As always, our goal isn't to predict the future. It's to identify the signals before they become obvious to everyone else. Thank you for listening to Financial Forensics. If you enjoyed this episode, be sure to share it with anyone interested in finance, investing, and the forces shaping tomorrow's economy. Until next time, stay curious and keep following the money.